Hello and welcome to BQ Prime. Joining us today is Mr. Mohit Joshi, CEO Designate of Tech Mahindra, and Mr. Rohit Anand, CFO of Tech Mahindra. They're speaking to us after the company's quarterly results, where the profit declined by a third and the revenue declined for the second straight quarter. Gentlemen, welcome to BQ Prime.
Thank you.
Rohit, my first question to you is: what explains this plunge in profit that we have seen in the second quarter?
Yeah. So I think from a profitability perspective, the first of the operating impact is driven because of revenue decline. We're seeing continuous discretionary spend cut in the industry and specifically on the comp side, a little bit also in the BFSI space. So that's causing a pressure on the profitability side, including utilization and some of the other operating metrics. Around 260 basis point quarter-to-quarter margin decline is or 2/3 of the drop can be attributable towards one-time actions that we've driven internally. So we're looking at portfolio focus on what we want to drive for the future and defining the core as a part of that. And hence there's a identification of regions, service lines and contracts which doesn't fit that risk and reward that we want to drive for the company, and hence we've taken one-time actions for that. We'll continue to do that scrutiny for the next quarter as well before we set the core and define the core for us, and then come back sequentially to all of you guys to share a plan towards an April timeframe.
Mm-hmm.
Yeah.
Against that backdrop, what explains the margin decline as well? How do you plan to shore up the margins here on for the rest of the fiscal? Do you have a target in mind? Where do you want to end the year at?
Yeah. No, I think as I mentioned, we'll share with the detailed plan with all of you guys with April. But when you look at historically, we've operated at a double-digit EBIT number. We've been at that mark. And at a lower revenue as well. So it's not that we've had higher revenue and that's caused the decrease. But I think from a plan perspective, specifics, detailing, I think all that's work in progress. We know some of the areas that we had already started to act upon, but I think it's be prudent for us to come with a comprehensive plan collectively from the management and share with you sometimes in April. Yeah.
Mohit, welcome to BQ Prime. I think we are talking for the first time in person. Yeah. So you have effected a restructuring plan that will come into effect from 1st January. Can you take us through the entire process and what is the aim of such a restructuring?
Sure. So, it's not really a restructure, it's a reorganization of the company. Like you mentioned, it has now been about 4 months since I joined TechM, and more than halfway through the process of transition with the current CEO, CP Gurnani. CP leaves on the 19th of December. But as CP and I and the rest of the senior leadership were talking about the shape of the organization for the future, a couple of things struck us, right? The first thing that had struck us was from a delivery perspective, a consolidation of delivery would really help us drive resilience, drive an improved margin structure, and help us drive a greater service line innovation. So one of the key sort of driving factors behind the reorganization has been consolidating our IT services delivery under a new chief operating officer. I believe this will help us unlock a tremendous amount of synergy and a tremendous amount of growth potential. Just historically, for instance, our engineering service line, which is such a core driver for us, such a unique differentiator for us, was split between our telecom business, our manufacturing business, and some of our Eastern European location, right? So by bringing all of that together into one engineering practice, we feel we can unleash a lot of energy. Similarly, on the go-to-market side, we had a fragmentation of our sales units between telecom and non-telecom businesses. We have consolidated this in Asia, Pacific, and Japan, and in Europe. In the Americas, we now have a very clear sort of vertical-driven go-to-market structures within North America. So, taken together and with a couple of senior hires that we brought into the market from a BFSI perspective, from a marketing perspective, I feel that we can drive, again, resilience, margin improvement, faster growth, and service line innovation.
Do you think this is the right time for you to dilute your revenue pool a bit more or expand the revenue pool a bit more? I'm given for the fact that you come with the reputation of being the BFSI guy. So do you think this is the time for Tech Mahindra to push into that particular space, especially when it accounts for almost more than a third of the entire industry's revenue?
Yeah. So look, I think if I take a look at the Tech Mahindra revenue, right? So first of all, Tech Mahindra is Tech Mahindra, and as our new CEO once very eloquently said that what we want to do is to make Tech Mahindra the best version of itself. We're not looking to make this into Accenture, not looking to make this into a TCS, right? From a industry perspective, clearly we have deep strengths in manufacturing and deep strengths in telecom, and we really want to make sure that we're able to double down on this. As you know, in manufacturing, in auto and aero, group has a tremendous heritage. The Mahindra Group has a tremendous heritage, so really want to focus on it. We do have $1 billion plus BFSI practice already, right? And I believe that we are very credible challengers in this space. We have a very significant healthcare practice, and we really want to drive growth in there. So now the idea is not to convert this into a BFSI consulting firm. The idea is very much to double down on the strengths we have in manufacturing and telecom, but equally to build out a much larger healthcare, BFSI, and a retail practice.
Okay. Another question to you. Tech Mahindra has been an outlier of sorts in this particular quarter. Your larger peers or even most IT companies have seen the headcount decline, but your headcount has increased. What explains this increase in headcount, especially when your metrics are not looking as good?
So I think two aspects to it. One is you segregate the headcount into BPS and IT. The BPS headcount's gone up quarter over quarter because there's a huge seasonal ramp up that happened during this time because of the festive season. So that's driving the increase in headcount. That will come down as you look at seasonality go down, right? So that will be the drop sequentially. In terms of IT, the drop in headcounts marginally down by 300 folks, 300 people, because we've invested in freshers and improving our pyramid, which is going to be a consistent strategy as we look forward.
One final question, I'll ask both of you to answer to that. The year has not been good for you or the industry. So how do you see the next 6 months panning out for you as well as the industry, against also in the backdrop of AI's impact, maybe it starts showing in?
Sure. So I'll let Rohit answer the the Q3, Q4 sort of revenue and margin visibility. But I think the AI piece is potentially a very significant tailwind for our business, and really has helped, for instance, our BPS business drive a lot of the work with the hyperscalers in actually building out and testing these new large language models. It has helped us drive, let me give you an example, in working with the hotel chain, for instance, right, that is building platforms for its clients to ask questions like, does my hotel have a heated swimming pool? It has helped us drive business with banks, for instance, in accumulating a lot of the information that has been on Excel spreadsheets and PDFs, so that employees can ask questions and those can be answered. In our core telecom business, it has helped us work with clients to reduce energy consumptions for mobile base stations, right? So I feel that Gen AI will be a very significant tailwind for our business. We're investing very heavily in it. We are among the top rated players as far as Gen AI is concerned, including a study that came out as recently as yesterday by HFS. We have trained over 10,000 people in AI pair programming and more than 42,000 people overall. So I do feel that Gen AI, irrespective of what is being said, will be a medium to long term tailwind for the industry.
So I'll come to you 1 second. So Tech Mahindra also has a long-standing tie with Microsoft. Do you think, and Microsoft is a major investor in OpenAI, so do you think those synergies also click in?
Well, I think, look, we've been working with all the hyperscalers, and we have significant relationships with Microsoft, like you mentioned, but also with Google and AWS. And we feel that both cloud and AI will continue to be significant drivers for the industry.
Q3 and Q4.
So I think while you mentioned it's been a tough year for us, but it's also an opportunity for us to reboot, and I think that's what we're doing, and looking at what future holds for us and prioritize accordingly. I mean, that's the plan as we look into the future. In terms of numbers, I mean, we typically don't give guidance, but just directionally, while the deal wins have improved, we see that conversion to revenue being a little bit of a lag, and hence when you look at the second half numbers, we see more of a flat towards a downward bias right now. Margin wise, I think Q3 will continue to do the actions on the portfolio towards getting to a normalized level at Q4.
All right. I hope the only way forward is up. I hope this is the bottom. Thank you, viewers, for joining us. This is Tushar for BQ Prime.